From 1 July 2026, if your employee's super does not reach their super fund within 7 business days of payday, your business could face super guarantee charges, penalties, and serious cash flow pressure. This is called Payday Super, and it is not just a small payroll update. If you run payroll weekly or fortnightly, this change affects every pay run. Wages go out, tax withheld, and now super needs to move more faster and closer to payday as well. If your payroll system is messy, if your employee super details are wrong, if your cash flow is tight, or if you still use the ATO Small Business Clearinghouse, this is something you need to understand. In this video, I'll explain Payday Super to you in plain English. What is changing, what the 7 business day rule means, why the clearinghouse closure matters, what employers should prepare, what employees should check, and what to do if you realize you have already missed a super deadline. Hi, my name is Neehal. I'm an accountant based in Sydney, Australia. This video is general education only, not personal tax, financial, legal, or employment advice. So, what is changing? Let's make this simple. Before Payday Super, many employers were used to think about payroll into 2 separate parts. Wages are paid now, super is handled later. For many businesses, super has been a quarterly task. That means an employee could be paid every week or fortnight, but the super payment may not reach the fund until much later. So from 1 July 2026, that timing changes. Employers need to pay super at the time they pay wages. So the contribution reaches the employee's nominated super account within 7 business days. That is the key point. Not just showing super on the payslip, not just calculating super in payroll. The money needs to reach the fund. That's the catch. And for the basics, the super guarantee rate is currently 12%. The rate has applied from 1st of July 2025 and continues into the 2026-27 financial year. So when we talk about Payday Super, we are not talking about when super is paid. It's not just about that. We are also talking about making sure the super is calculated and paid on time. From 1 July 2026, Payday Super changes the rhythm. Super becomes part of pay run discipline. Now, some employers may say, we already pay super. What is the issue? That may be true, but Payday Super is not only about whether you pay super or not. It's about when the super reaches the fund. It is more about timing. It is more about discipline. So the main issue here is timing. If you relied on quarterly timing to manage cash flow, that habit needs to change. If employees' details are wrong, you need to fix them faster. If your payroll software is not ready, the problem can repeat every single pay run. So to make it more simple for you, let's use a simple example. Imagine a cafe with 10 casual staff. The owner pays staff every Friday. Before Payday Super, the owner may think wages are weekly, but super is something I can handle later. But from 1st of July 2026, every Friday payroll becomes more important. The cafe needs to correct employee super detail. The payroll software needs to calculate super correctly. The payment process needs to work, and the business needs enough cash available not just for wages but also for super. So the real change is not just super is paid more often. The real change is this: the payroll has less room for messy system. Here are 5 risks employers should understand. Risk number 1 is cash flow. If you were used to holding super until the quarter, Payday Super changes that pattern. A weekly payroll business now needs to have super money ready much more frequently, and mostly on the same payday. Risk number 2, wrong employee super details. If the employee's fund details are wrong, the payment may be rejected or delayed. Under Payday Super, that is not something you want to discover too late. Risk number 3, payroll software error. If your pay item, super settings, or payroll setup are wrong, the same mistake can repeat every pay run. Risk number 4, clearinghouse changes. The ATO Small Business Superannuation Clearinghouse closes at 11:59 p.m. Australian Eastern Standard Time on 30 June 2026. If your business still relies on it, you need to move to another super payment solution. Risk number 5, super guarantee charge and penalties. If super does not reach the fund on time, employers may become liable for super guarantee charges and penalties can apply. And if you realize you have already missed a deadline, do not ignore it and do not guess. Speak with your accountant, bookkeeper, or registered tax agent as soon as possible about correcting the issue, whether a super guarantee charge process is required and what record needs to be lodged or kept. This is why this is not something to leave until after the first pay run. If this is useful, hit like so more employers, employee and payroll people can find this before 1 July. Now, let's talk about what small businesses should do immediately. This part is especially important for small businesses. The ATO Small Business Superannuation Clearing House closes permanently from 1st of July 2026. Existing users have access only until 11:59 p.m. on 30 June 2026. So, if you currently use the Super Business Clearing House, do not assume it will be available after 1st of July 2026. You need to check your payroll software, accountant, bookkeeper, or commercial clearing house options, and also download any records you need before access ends. This is one of the most urgent practical action for small businesses. Now, from the employee side, this change is also important. So if you work in Australia, do not only check your take-home pay, check your pay slip, then check your actual super fund, because a pay slip showing super does not always mean that the super fund has been received. This is the key difference. Your pay slip may show the amount, but your super fund confirms whether the contribution has actually arrived or not. Under Payday Super, employees may be able to notice late or unpaid super much easier. And that matters because missing super is still missing money. Even if you don't spend it today, it is still a part of your future. Now, here are the big mistakes to avoid. Mistake number 1, thinking Payday Super means super goes into the employee's bank account. It does not. Super still goes to the super fund. Mistake number 2, thinking close to Payday Super means whenever convenient. The important rule is that contribution generally needs to reach employees' nominated super account within 7 business days. Mistake number 3, waiting until the last week to prepare. By then, you may have software issues, missing payroll details, clearing house changes, and cash flow pressure all at once. Mistake number 4, ignoring rejected, late, or missed super payment. If a super payment is rejected, returned, or late or missed, do not leave it unresolved. Fix it quickly and get advice if needed. Mistake number 5, employees only looking at net pay. Your net pay matters, but your super matters too. So, if you're an employer, business owner, bookkeeper, or payroll person, here is your checklist. Check your payroll software, check employee super fund details, check your employee onboarding process, check your super clearing house or payment provider, check your cash flow for every pay cycle, check how rejected or returned contribution will be fixed, check what your process is if a deadline is missed, and if you are still using the ATO Small Business Super Clearing House, transition before it closes. Do not wait until the first pay run after 1st of July to find out your process is broken. And if you're an employee, here is a simple checklist. Check your payslip, check your super fund account, check that your employer has your correct super fund details, and if something does not look right, ask early. Do not wait years to check your super. So here's a simple summary. From 1 July 2026, Payday Super means employers need to pay super at the time as wages. So it reaches the employee's nominated account within 7 business days. The super guarantee rate is currently 12%. For employers, this is about payroll system, cash flow, clearing house changes, employee details, missed payment process, and compliance. And for employee, This is about checking that your super is actually reaching your fund. This is not just a rule change, it is a payroll habit change. So if you are a business owner, do not read this as a last minute payroll update. If you are an employee, do not ignore your super. And if you want Australian tax, super, payroll and business topic explained in a simple English, subscribe to this channel. I'm Neehal and I'll see you in the next video.